extended periods of unemployment. What term life insurance can do all that? Western Reserve Alliance Advantage Term with living benefits. No other term insurance product bundles so many solutions to life's unexpected problems. And all in one policy. So for more information, call Brokers Alliance 1-800-290-7226. Stop selling the old term. Start selling the new.
Well, welcome back to the Business Insurance Zone, the talk show that focuses on insurance in your practice. I'm Steve Savant, your host, financial color commentator, and interviewer extraordinaire. I'm with Susan Carlson, head of our LTC department for all of Brokers Alliance. Everything that is LTC, you are, Susan. So,
Thank you.
within the world of, we call her Miss Morbidity. You know, what can we say? We're talking about today individual policies.
Yes.
And when we are talking about all the provisions, and you brought a few in there that I didn't know about. Wow, it's a learning experience on the show. I'm also trying to remember the actual 6 definitions, because you can't get in there until these have to be met. Mm-hmm. Talk a little about the activities of daily living as it relates to these individual contracts.
Okay. With trying to measure or decide when somebody is eligible for benefits, the insurance company looks at what we call activities of daily living. And I think the easiest way to remember them is what you did this morning to get ready for work. Okay. We all got in and out of bed, which is transferring.
That was a tough job for me right there.
We were able to wait until the morning to use the restroom. Yeah, no comment. We use the restroom.
I do have them, but I don't have the time on the segment. Otherwise, I'd comment.
We used the restroom on our own. We were able to get a shower. We got dressed, and we had breakfast. If I'm in a car accident tomorrow and I can't get in and out of the shower and dress myself for over 90 days or longer, I need long-term care. So the way that I remember them is what we did this morning, and that's how I explain them to our clients.
So getting out of bed transfer issues, right?
Yes, transferring, using the restroom, waiting until the morning to use the restroom, getting a shower, feeding yourself, and getting dressed. So 2 of those? For a period of 90 days or longer.
So if it's 2 or more, 90 days longer, you're on LTC.
Exactly.
So what are the definitions of ADL then, right? Are they different from carrier to carrier? Because now we carry a lot of carriers here, and we've talked about them all through, promoting here at Brokers Alliance. Are these carriers' definitions of what is an ADL pretty much universal? There's not a lot of differences?
Yes.
Well, actually, that's pretty good. I like the universality of that.
I do too.
Okay, well, when you're talking about it and you have this ADL experience, and it goes for 90 days. Okay, is thy first reaction home care? Because you said most of the front end is going to be this.
Absolutely.
Okay,
Absolutely.
So if that's true, are these policies predominantly, I know there's a couple here like MedAmerica's a cash plan, an indemnification plan. Are most of these, though, reimbursement plans?
They are. I'd say
so how
about
do you
90%.
How do you quantify when it sounds like, is there a conflict of interest for the relative to be in helping, right? As far as helping out, and are they okay about the bills, and is the insurance company going to play ball with you on the claims area?
Well, I just think of my own experience. I know that if when my mom needs long-term care, absolutely I'm going to pitch in when I can. And all families will do that. And I don't expect to get paid. I mean, this is family, and this is just what families do. But by having a long-term care policy, I can then hire somebody to come in and do perhaps more of the skilled care or to take care of my mom when I'm not there.
Hey, let me ask you about that, Susan. If let's say you're helping your mom out frequently, you are the dominant caregiver in your family. I think you were telling me you're the eldest child.
Yes.
So am I.
Yes.
So we feel that obligation. But what would happen if I need to take a vacation? Do these have like vacation, or I think it's called care respite?
They have respite care. So,
respite care. Talk about. There's another perk.
It's interesting. Is I'm a single mom, and if I want to take my child to Disneyland, and I'm watching my mom as much as I can, the policies will actually pay for me to hire somebody in before the elimination period. I don't have to satisfy my elimination period. And they will provide services for my mom, usually up to 2 weeks. Some of them are 3 weeks.
Professional services too, right?
Yes.
Licensed, not just anybody, right?
Correct.
They bring in a licensed practitioner. I mean, so really, the respite care, is that standard in most contracts?
It is.
So everybody understands that the caregiver needs a break.
Correct.
when you see people, we're not dealing with it as far as you and I seeing it. We're just on the edge of watching these things happen in our own families and so forth. So we're already anticipating these needs. But are there any other things that we should look for besides, as we did in the first segment, talked about, bed reservation. Now we're talking about caregiver, relief, give them a little R&R. Is there anything else that are some of these little perks that we need to look at?
Well, a lot of they're becoming very much, I don't want to say standardized, but they're all starting to become closer together where, there's not a huge difference between John Hancock's product and maybe Genworth's Financial. Maybe
then it is all going to be price?
Well, no, but the pricing is different. And John Hancock might have something as an additional rider that Genworth has included. I mean, they do have some little differences. I think.
I'll give you an example of a rider that I actually have to pay for.
Okay.
Do you got one of those examples? Like a rider I might have to pay for.
Well, you could have the survivorship rider.
I could talk about that.
So if you and I were married and we each had our own policy.
Thank God you're not married to me, Susan, because you would be a wreck.
Well, this rider would go into effect on the 11th year.
Okay.
We would pay for a premium for 10 years. Then if one of us should die and we had never been on claim, the surviving spouse's policy is contractually paid up.
Even though they're not on the policy at the beginning, they're just on a rider.
Well, they each have their own policy, and they each have the rider.
But the rider goes for whoever survives.
Yes. Versus.
Do people buy that though? Do you see that a lot? Or?
With Genworth, it's automatically included in their policy. But with the other carriers, you can add it on. It depends. If there's a large age difference between a husband and wife, we would very much look at it. Or maybe he could be a public safety officer or something where her income is going to go down significantly when he passes away, because when he's gone, she needs his policy even more. So that might be a fit. So it really depends on the dynamics of the clients.
So some riders or some ideas or policy provisions are incorporated in the contract. There's no extra cost for that. It just is what it is, part of the definition of the price tag.
Right.
But like this rider, is there another rider that you think that, hey, here's another rider that you have to pay for on some contract, and here is that perk that you would get?
Well, a lot of the carriers have shared care riders, because the biggest fear is, well, what if the policy runs out? What if the policy expires? So some carriers would have where you would have a policy and I would have a policy, and the rider would make a bridge. So if you needed long-term care and you used all your benefits, you could then tap into mine.
While both are living.
Yes.
Unbelievable.
Yes.
Who does that?
Well, John Hancock does that. I believe Prudential does as well, and the Omahas.
So when you think about a bridge, that must be a very important idea at the close of a sale like this.
If you have a little bit of hesitation. Now, Genworth has a unique shared care that I like for overcoming an objection towards the gentleman, where it's just one pool of money with two insureds. So either one of them could use it. So you could say to him, okay, granted, I clearly understand you're never going to need long-term care. You've told me till you were blue in your face. But we're going to put you on this policy just in case. And if you never use it, then she gets all of your benefits. And that can also work with some of the other carriers. So if you have the gentleman, and I don't mean to always be pushing to the gentleman, but that's usually who our pushback is coming from. We could say, well, we can tap this on, and then that way if you never use it, then she has it all. So
I think that would be a great provision, not only to hit the objection of the male, but I also like the idea of covering more than likely, I just see so much of the statistics going, setting up the wife is going to be taking the brunt of his LTC experience.
Right.
And while he's having a long-term care experience, how many policies are actually tapped to their max? And with everybody pushing for longevity, medical advances, I'm seeing more and more people are living longer than their insurance is. So now, if it did bridge over,
okay,
is it conceivable that it could tap hers all out?
Absolutely.
Too? It could happen, right?
It could. Okay. It could. Some companies have safety nets where you have to save a year or 2 years for her, but that is a possibility.
Any other provisions that you think are something noteworthy to bring up, whether they have to pay for them or not? Because I'm trying to educate our people today to say, hey, look, there's a lot of provisions in here in your estate planning, in your retirement planning. This is why you need to start thinking of long-term care. and why it's important to start asking these questions. And I think the provisions sometimes sell the policy itself.
Well, and I keep going back to that care coordination benefit, which is very good for your affluent clientele, because those affluent clientele have advisors, whether it be their financial advisor, their tax advisor, and by having a long-term care policy, they now have their care advisor who is outside of the family. So I think that is one provision that is often overlooked and not discussed enough with the family, because that's the family's benefit. That to me is the real umph of a long-term care insurance policy.
I think it's important to bring it up. I don't give tax or legal advice on our show, but if you're listening to this strategy, there's a great strategy. You need to incorporate this in there. Of course, always talk to your CPA, your attorney, or your broker-dealer compliance officer on anything we talk about on the show. But to me, this is a big deal, because that could be an exposure to your practice, not bringing it up as part of either the retirement model or your estate plan.
Absolutely.
So when I'm thinking about when we do a quote for individuals, because we're talking about today's show, individual quotes, what's the first thing? We send them a data collector, right? Because we don't know what company we're going to go with. We have so many, and you're going to make the call as our liaison, as our quarterback on. We've gotten all the data. We've received it, and we can get that from you, right? The data collectors for all this. And again, just write Susan, email her at susan.carlson@brokersalliance.com, or just call her toll free, 1-800-290-7226, extension 140. So they get the data, they give it to you. You then go through your analysis, all that it's meant. You choose a carrier based on the analysis. Do you give them one, or do you give them a couple if they're real close?
Normally what I'll do is I will spreadsheet the carriers for them, even though, and try to make them as apples to apples. So I'll do a nice spreadsheet and then send them the top insurance companies.
Like how many would you say?
Normally we do 5, about 5.
The top 5. And is that a customized spreadsheet? Computer program.
We have a program that we just punch the information in, and then it helps
lays
us.
It all out.
Yes.
It's really, isn't it a nice, what I like about it is you can hand this to your client and say, I've done my due diligence here. I have the top 5 carriers based, again, on your specific data information that we did on the collector.
Correct.
So when I receive that, I'm going to go ahead and I'll be able to make a quantitative, then I just call back again, right? At your number, 1-800-290-7226, extension 140, or write you, susan.carlson@brokersalliance.com, and you can order the illustration and all the applications and everything you're going to need. I love all that. Well, listen, I want to thank you for being my guest, Susan, on long-term care. We've been talking about individual contracts today. You can write me at our show's email, thebiz@brokersalliance.com, or call us, 1-800-290-7226, extension 147, or hop out to our website and always visit. We love you, welcome you, www.brokersalliance.com. I'm Steve Savant. You're listening to the Business Insurance Zone. That's the buzz on the biz. Get into the zone, the Business Insurance Zone.
This has been a Bravo video event of the National Insurance Clearinghouse and Brokers Alliance, one of the largest distributors of insurance products and services to a nationwide network of insurance professionals. You can contact Brokers Alliance at brokersalliance.com or 1-800-290-7226, extension 147.